Do you remember the gamma squeeze that Tesla just went through between December 4th, when Tesla was a $350 stock, all the way to $488 on December 18th? This was a gamma squeeze. And my friends, it is back. It is back in a big way. We're going to look at some of these numbers that took place in the options market on Friday, and they are even bigger than what we seen during the last gamma squeeze. We could be setting up for a larger breakout from here. After all, Tesla was up 9% on Friday and filled the gap that we had on January 2nd with the delivery number. I mean, you erased the delivery number loss yesterday. That's a great sign. James E. Thorne, chief market strategist at Wellington Altus, says that he hopes you bought the dip in Tesla. Gap closed in on one day, a sign of strength. A retest right back to where it broke out. Classic technical playbook trading. Noise from Wall Street being ignored. Will be a $2 trillion company in 2025. By the end of Trump's second term, a $4 trillion company would not surprise. Don't bet against Elon, a simple rule. Now, if we take a look at the gamma squeeze that took place on Friday, the numbers are insane, okay? No matter if you're looking at, let's say, the 380 call with 17,000 for volume, 380-250 call with 21,000 for volume, 385 call with 50,000 for volume, 387.50 call, 40,000 for volume. But get this, 121,000 for volume at the 390 call. Then you have 35,000 at the 390-250, 90,000 for volume at the 395, 60,000 for volume at the 397.50, 190,000 for volume at the $400 call, 70,000 for volume at the 402.50 call, 118,000 for volume at the 405 call, 62,000 for volume at the 407.50 call, 125,000 for volume at the 410 call, 38,000 for volume at the 412.50 call. Wow. Okay. That is insane. That is higher volume that you've seen on Friday than any other day during the gamma squeeze period, again, from December 4th through December, 18th? You never seen, what was this, 5? 1, 2, 3, 4, 4 specific strikes over 100,000 for volume. And this one's almost 200,000 for volume. This one's 125,000, 118,000. And then another like 90,000, right? So almost 5 single strikes on the options chain with about 100,000 for volume. Okay, roughly. You didn't see that at all before. The gamma squeeze that we got previously was like one big strike had most of the activity. And we kind of squeezed into that strike, and then it would kind of die down for a bit, and then we'd start up the next day and we'd squeeze to the next strike. What happened on Friday was massive. People piled into options. This is the gamma squeeze, and it looks like it is back. And it doesn't look like delivery numbers is going to change anything. After all, we kind of said this heading into Tesla's delivery numbers, that delivery numbers, like, they have historically been the most important thing for Tesla. But in 2025, it's all about autonomy. It's all about AI. It's all about applying that AI, turning that AI into Dalahalas, robotics, cheaper, lower priced Teslas, so on and so forth. Now, it's also pretty wild on the day on Friday. You had 280 different trades totaling $185 million with a positive order value of 75%. it wasn't a crazy large dollar day for Tesla options. And that just tells me, I mean, with that 9% move, imagine if you've seen $500 million worth of options, or like Thursday's number, $2.31 billion worth of option activity. What if we were to see something like that? Are we going to see something like that? And if we do, how much of a rally could we see in Tesla stock? Now, I think the same thing remains true. I was making videos in December talking about the potential for a short squeeze. That potential is here, okay? It's still here. It has not went away. In fact, you actually had 1 million shares cover on short positions on Friday. That could have been a contributing factor that sent Tesla stock higher. Now, you had borrowed shares that were sold short, of 1.03 million, but you had return shares, or shares that were covered, of 2.06 million. That means on net, you had 1.03 million shares that were covered on. So there was definitely a impact, you would think, from that to push Tesla stock higher on Friday, but it was mostly a gamma squeeze. If we do start to see some of the almost 81 million shares sold short actually start to cover, then I would expect you could see a pretty wild rally for Tesla. Now, the other great thing about Tesla stock now is, again, what I said in December. You had profit taking, you had tax loss harvesting, okay? Not as much of the tax loss harvesting part for Tesla specifically, but you did have some profit taking. And now that you're into 2025, hedge funds, institutions, hopefully retail investors are starting to position for 2025. And Tesla is the top stock for 2025. Now, let me throw something crazy at you. Microsoft was the biggest loser out of the Mag 7 last year, okay? Only up about 12%, less than half of what the S&P returned. Did you know Microsoft is the largest buyer of NVIDIA semiconductors, NVIDIA GPUs? Okay, that's kind of a weighing mechanism, in my opinion, to show that it's all about the AI application. It's not about who buys the most NVIDIA chips. Okay, that has nothing to do with it. It's about companies that actually create a product or service with AI. And Microsoft seemingly has failed with Copilot, and that doesn't look as successful as people thought it was going to be. Now, when I think about Apple Intelligence, when I think about other products that companies are putting out, none of them stand a candle, even to the slightest bit, compared to Tesla's AI, compared to fully autonomous vehicles. I mean, Tim Cook back in 2017 said full self-driving vehicles are the holy grail of AI. This was back before AI was popular. So when you think about it from that sense, the companies that will be rewarded the most in 2025 are the AI appliers. They are the companies actually changing the world with AI, and Tesla is by far the number one winner there. And I think it makes a lot of sense if people start to position in Tesla in 2025, right? In January. Because think about it like this. It's almost like NVIDIA back in 2023 and 2024. Hedge fund managers would say all the time, I mean, we got to be bullish on it, because if we miss it, then we're up shit's creek, okay? That's a problem. Our clients are not going to be happy if they miss AI. Their clients are not going to be happy if they miss the biggest thing that ever happened with AI, and that is full self-driving and eventually robotics. That's why you could see this push from hedge fund managers to say, even if I'm not really bullish on Tesla, even if they're scared of valuations, right? They can't afford to miss it. Because what if Tesla triples in 2025? And that's where the alpha is. in our markets. Maybe Tesla's the alpha. Maybe the S&P goes up 10, 15%, but Tesla goes up 200% or 300%. You don't want to miss that as a fund manager, okay? So you may get more positioning into Tesla in the early part of 2025. Not even because hedge funds and institutions, not all of them are more bullish on Tesla, right? But because they can't afford to miss the next big revolution in AI. I don't think a lot of people have thought about that. And that could be a factor that pushes Tesla stock higher. Some people are calling for $500 per share into the 500s by the end of January. And that's certainly possible, in my opinion. Even Mike Investing over here on X with 110,000 followers says it's just started. The massive Tesla breakout for 2025 has just begun and will not stop until Tesla hits not $500, but $800 plus. Interesting. The institutional investors loaded heavy as they see Tesla to become the most valuable company with a $5 trillion plus market cap soon. $600 incoming by April. Mark my words. That's pretty strong commentary. And from a technical perspective, in my opinion, this is exactly where you wanted to see Tesla bounce. Now, obviously, you wanted to see it bounce closer to this trend line, okay, at about the 385 level. You actually fell below that to 373. It looks like this was kind of that flush out zone where people that were maybe not as confident in Tesla's ability to recover. I know some people said, even Meet Gavin was talking about Tesla dropping back into potentially the low 300s, maybe 250s. All that's bullshit, okay? There was nothing to suggest that was coming next. Or I would have told you that. If there was a good chance of a further crash for Tesla, I will be the first one to tell you. But in fact, it looks pretty good here. Now, it'll look better when Tesla, in all fairness, gets above that 420 level because you have hit a new lower low. Now, depending on what time frame you're looking at, okay? So if you're looking at the long-term view of Tesla, it looks like we've continued to hit higher lows if you consider the last low, this base, in November. But technically, from the 488 level, we dropped down to the 410 level or so by December 20th. You bounced up again to the 460s. This was a low, it looks like, and then you fell again. So this was a lower low. Once you get above really 420, 425, things start to look better again, okay, from a technical perspective. Now, they don't look terrible right now because you held support, or what looks like, at this trend line that I have drawn here on the charts around 385. You're well above that now at $410 per share. Okay, but we do want to take that next step, $10 higher or so, to get back above that previous low. At that point, yeah, you're likely gonna rocket higher pretty dramatically. Now, also at the same time as we've kind of squeezed out the, I don't want to call them paper handers, but that's kind of what it is, the short-term traders that don't understand Tesla, that really didn't want to be that long in Tesla. We shook those people out with this 23% drop we've seen from 488 down to the 370s, okay? We're a lot less likely to see more sellers than buyers. Okay, we're much more likely to see more buyers than sellers. That will continue to push Tesla stock higher. Mix that with the option activity, the prospect of shorts covering on short positions, and Tesla stock could go absolutely bonkers here soon. I don't think $600 per share by April is too ambitious as long as the economy holds up. Again, there's 3 risks to next year, or I'm still 2024 mentality, to 2025. There's 3 distinct risks. Number 1, the economy fails. We start to go into a recession. Bad news for Tesla. Tesla's going to fall 50% or more. Not good. Okay, so that's number 1. Inflation that reignites. That's not good. If the Fed needs to raise rates, that's an issue, right? So inflation reigniting, Fed raising rates, that's a big issue for Tesla. And really just the Fed raising rates raises the odds of a recession. So kind of go hand in hand a little bit. Number 3 is aggressive Trump tariff policies. Let me tell you, okay, Trump has kind of preconditioned the path to like a 10% blanket tariff on everything. And that would be seen as like a better case scenario, okay? So Trump could probably get away with a 10% blanket tariff on everything, on everywhere, and the markets would probably rip higher on that because it was threatened 100% tariffs and, you know, different countries, different amounts. So I think the tariffs have to be pretty extreme, like 20% or higher across the board. To actually be seen as a negative by Wall Street. Okay, it's kind of like if you go to the doctors and you think you have, I don't know, pneumonia or something, that you could go to the hospital and you find out you just got a little bit of bronchitis. You know, that's a little bit better, right? You're a little, I guess, happier because now you don't have to go to the hospital. You don't have pneumonia. Your lungs aren't filling up with fluid. Just got a little bit of a chest infection. Okay. Kind of the same situation with tariffs. Obviously, way different, but kind of similar in the emotional aspect of how our markets might look at tariffs. But if we were to get the promised like 100% blanket tariff on China, yeah, markets are going to crash. That's a bad situation. I don't think Trump wants to do that. I don't think Trump wants to, you know, do a worse job than Biden. Biden did a pretty good job, let's face it, at keeping the bull market alive. I guess that's what happens when you spend like you're drunk. Okay, bull markets just go on and on and on. I don't think Trump wants to be the guy that ends that. Okay, so I'm not super worried about the last risk out of these 3, but it is something to consider. With that said, people are negative. Sentiment is negative right now. CNN Fear and Greed Index is sitting in fear territory. 65% of stocks are in an active decline, even following the bounce that you've seen on Friday. There is a lot of room for markets to get more bullish here. Now, we have earnings season coming up. Earnings season is probably going to be pretty good. NVIDIA reports like the end of February. So I don't think you really have too much to worry about as far as earnings. I think they're actually going to come in pretty good and probably beat expectations. You have some economic data coming out next week, JOLTS job openings, ISM services PMI, as well as the jobs report on Friday. That is data for December, so I'm not too worried about that either. Inflation, that's a toss-up. If inflationary data starts to come in bad over the next couple of weeks, that could be a big issue, but I'm not certain inflation's gonna, come in really hot. If anything, it could come in a little bit lower because there was a lot of discounting happening in December. I guess one of the wild cards for January and even into February could be the inauguration. Does Wall Street take that as a buying opportunity or an opportunity to get a little bit more fearful about some of the negative Trump policies, like potential tariffs? Okay, it would not surprise me if we kind of get nervous before January 20th, sell off a bit, and then rally aggressively after the election as people realize, oh wait, tariffs are not going to be as bad as we think. We are in a pro-growth regime. The government is our friend, essentially, with deregulation and hopefully lower inflation. That's my call for 2025. Maybe the good outweighs the bad here from Wall Street's perspective. And January is a very strong month. February could be a strong month as well. The first kind of historical month to be concerned with during a presidential first term or second term, I guess technically, is March. March tends to be the weak month when a new president gets inaugurated. So maybe watch out for a little bit of turbulence in March. But I mean, by then Tesla could be well into the 500s. maybe even the 600. And for anyone that is wondering, I said it was a good level to buy Tesla if you wanted more Tesla in the 420s. Any price lower than that, I think, is still a great level to be buying as well, which includes where we are today at the time of recording this video at $413 per share. Hopefully you took advantage of the lower prices in the 370s if you're bullish on Tesla, of course. But if not, if you wanted to wait for a little confirmation that we're going to bounce back, I don't think 413 is a bad price. Also, I think Tesla stock could end 2025 at $945 per share. That is my 2025 year-end price target. Again, as long as the three big risk catalysts for 2025 do not happen. Again, higher inflation / the Fed raising rates, a recession or something close to it, or stupid aggressive tariff policies. Without those things, I think Tesla could hit $900+ per share by the end of this year. That's my call. Let me know your call for Tesla stock this year down below in the comment section. Ladies and gentlemen, that is going to do it for this video on your Saturday afternoon. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.